Uranium stocks have been quietly waking up, but here's the critical question that no one is tackling. Is the bottom actually in? Investors everywhere are starting to sense a shift, wondering if the brutal bear market is finally behind us. And we're all asking the same urgent question. Is now the time to jump in, or is it still too soon? Let's take a look. All right, so what I have here is a chart of the U308 futures contracts, very illiquid, but it gives us a sense of what spot prices of uranium are trading at. We're now at 68.85. This is important because we spent the entire month. First of all, there's been a bear market in uranium for over a year. It's been like 15, 16 months now that since the highs. And when I zoom in, the entire months of March and April, during all of that chaos, has been a very quiet basing formation on spot uranium prices. Now they've been selling at a deeper discount than the refined uranium, and what we've generally seen is that they've stopped selling. That entire bear market decline really found a base. And over the last week, we have seen uranium prices, let's say just even since mid-April, we've seen about a 7.5% rise, almost $5 on the U308 since then. And so most of investors will use the Sprott Physical Uranium Trust or the YCA over on the London Exchange. This is a closed-end fund that allows a retail investor to own physical uranium, the commodity. And so we have the Sprott Physical. You can see here this very clear decline that's been going on over that same 18 months because it's been tracking the commodity. Notice here that we have started to close above the 50-day moving average. Now, we've had these fake outs before. This is not like some magic indicator. But what you do want to recognize is that bull trends spend the vast majority of the time above the 50-day moving average. So without it being this magic signal, we always want to observe when there is a trend shift potentially happening. And so we have clearly this rise. Now, during that last leg down in April on the Sprott Physical, it did break to lower lows, but spot prices of uranium didn't. It was the closed-end fund that was trading at a deeper discount to what it would normally. It was like a 15% discount to its net asset value at the time, and that closed. And we now have seen uranium start to rise. Now, what is the real puzzle, and what's the one thing to really ask? Well, first of all, what we know is that uranium prices are now at a level where it's not economical for new production to come in. And that's just when we know the supply and demand fundamental story, which we talk about on Macro Voices all the time, is very bullish, as in the demand is going to be there. And so this is a very logical place for us to see the bottom start to form. And to me, the asymmetry is completely skewed in your favor, in a sense that there's probably only limited downside volatility and a huge upside potential. But the question and the puzzle to solve is, how long do we have to wait for the bull phase to begin? Because just because we, let's say, find a price level that is good doesn't mean we can't go through, let's say, a 6-month basing formation where a bottom is banged out. And so we're trying to solve this puzzle. I love this Stanley Druckenmiller saying that he'd rather go all in the second inning of the game and know that the game has started, rather than trying to get in early and then getting churned waiting for a turn point for many, many months. And so we're at a really interesting moment where putting some skin in the game is certainly an interesting idea, but there is still not the technical evidence we need yet that the starting gun has been blasted and that the next bull phase is already underway. So only people that are getting in at this stage are, let's call them value investors, people that want to buy by price alone and the fact that it's cheap. You can justify owning it, and so that's the type of buyer that's buying here. I will keep tracking this for all of you for the next month or more to really see how the price action settles in and answer this question as to whether a new bull phase is beginning here. I want to wrap up by looking at uranium stocks. I'm going to focus here on the URA, which is an exchange traded fund for uranium companies that are actually mining uranium. And this also was a very nasty 6-month market drop in this space. And what we now have seen, which I love technically, is the V-shape recovery, which is you had the last leg of selling in March wipe out from $25 down to $20, and then a recovery all the way back to $25. When you have this kind of a recovery, it means that there was obviously some desperate selling, but the fair value price is probably much closer to this $25 level, and that little short-term selling was just an opportunity to buy low. The one signal we're going to be watching is when we do get a little correction here, is it bought on dip? Will we see it be like a flagging formation that creates, like some technicians will, if it pulls back to $23, be looking whether this is an inverted head and shoulders or a basing formation, and then will it sustain above that 50-day moving average? This is an interesting moment because we're at a stage where we're just trying to determine whether something new is underway, and so stick around in the weeks to come and we'll try to solve this puzzle.